Hi everybody, this is Gary Dean and this is our nightly video report for Tuesday, January 31st, 2017. Had an all-around day today. We had a pretty good move to the downside and I was, I was really trying not to be all uh bearish right now because I'm leaving the door open that this gap is going to get filled before any say larger move to the downside takes place. Now, one thing I did think was that we had a chance of coming down to this 2249, which is the 50-day moving average, because we haven't touched that yet. So we could just kind of chop around here, or we could drift down. Now, if they head up, the only thing I'm really seeing is that they would come up and close the gap. The technicals have just started rolling over. So I believe this has just started, and we're kind of in this kind of neck of the woods right here where it's, we just kind of go and chop around, everybody gets frustrated, and then we get a larger move. But I'm anticipating it will be something. It's going to be like this, and that's primarily because of the sentiment timing and what Woody's looking with the kill zone. And if you guys aren't members of that, I would strongly recommend it because these moves have been pretty hairy. But anyway, if you are members, that's what I'm going off of, and it's really, it's in this chop area right now. So that's why I was saying, I was trying to set the proper expectations where, if we came down to this 2249, maybe take half off and look to re-enter a trade, whatever short position you're using, instrument, and if it bounces, take the other one there. Now, if they head up, I'm not doing anything. I'm just going to hold on to my positions and kind of wait for everything to break down because I do believe this is a topping process. 60-minute chart, you can see they're trying to hold this moving average right here, the 200-day moving average on the 60. Now, this does have the makings of how they do try to push the market higher. Notice that they always come off of some type of double bottom. So we had a nice rally yesterday into the 50-day moving average, came back down and then rallied back up. So there's probably higher odds that they're going to come up and close this gap within the next day or so. But once that completes, I still believe the bigger move is going to be to the downside. And, the first stop may be down at this at the 2249. So one roadmap may be that they come up, close the gap, and then come back down and touch the 50-day moving average, only to chop around a little bit more. Now, again, I'm just taking educated guesses as far as the roadmap. What my trade is and what I believe is that there's more points to the downside than there are the upside, even from these levels here, even if they try to push higher. So that's why I've been building my short position, and I'm kind of just going to relax with this and let it play out. And it may take a couple weeks for it to do it. I'm not 100% sure. It may happen sooner than that. But what we know, what we really want to know, this is more for the trading members here, and that is the bulls need to push it above this 2281, 82 area. If they do that, good shot they're coming up to close this gap at the 2291. So that can be a quick trade if you want. The Bears need to get it, with conviction below this 2268. Now, in the morning notes, I had said if what the Bears need to do is push it through this 2275, and then we'll come down to the 2266. It came pretty close to that, and now we rallied back up again. So the Bears need to push it through this 2267. That opens the doors for the move down to the 2255, and then down to the 2249, which is the 50-day moving average, which I was showing you. So the lines in the sand. Bulls, they need to get it above the 2282. We do know if they are going to get above it, they're probably going to gap above that. Bears need to get it through the 2269, and then the next stop will be the 2256, and then the 2249. 15 minutes, you can see that this is the resistance area here. That's at the it did 2284, 2282, pretty similar to what was on the 60-minute chart there. Now, one thing that's interesting is we came really, really close to touching the 78% retracement. And remember, when we were up here, this was really the first stop based off of the wave count. So I do believe there is going to be there's still more on the downside. I would not be adding shorts. I was kind of saying don't add anything down here. If they head up, we can look to add, but if they head down, just manage your positions. We did have some bullish divergences here, so odds are they're probably going to try to come and close this gap. It would, I think, it would be more of a surprise to me if they don't and they head down. But this market's just full of surprises. So right now, what I'm looking at is they may try to come up and close the gap. If they do, so be it. If they head down, I'm going to manage my trade, and if it gets down to that 50-day moving average, then I'm going to take some of it off. If they blow right through it, then I'm just going to run with it. But my ultimate targets are 2185, 2158, or 2113. This is where I believe the move is going to come. It's just a matter of when exactly is it going to start with the big move to the downside. So with that, have a great night, and I'll talk to you guys tomorrow.